after a Wednesday morning print, be able to talk to all the governors and have them update their dots. I think most folks said after one print, they said it's not really worth updating my dot. And so that's why you got that shift down to one cut. But I think that's generally right. I think, if stuff is still moving, humming along over the course of the summer, now you're swinging into the election season. I think it's going to be tough for them to start moving in September and November. And I think perhaps they at best can squeeze in one rate cut in December. And I think that's where the median member sort of lies.
And Jason, do you think that that's kind of an acceptable scenario here? It's kind of amazing the way that the markets have basically been okay with Fed patience, and obviously you've had market-based yields more or less cooperate. But how long can we wait?
Yeah, Mike, I think absolutely. The numbers that we got last week is clear indication that inflation is moderating. Again, this is the second month in a row that we're seeing very positive numbers on the inflationary front. We're coming off a backdrop of we had 3 months that were difficult where the Fed was talking about a trend of inflation obviously moving higher. But as I look forward, and to Jordan's point, coming with the election coming ahead and other geopolitical stories that potentially will play out here, I think it was prudent for the Fed to talk about, maybe potentially one cut in December. Obviously, the dot plot has been updated from 3 cuts to 1 cut. And I think that sets a nice ramp into 2025. Because again, I'm in the camp that earnings have been strong, the economy is relatively strong. I think the Fed is getting a lot of what they've asked for in terms of inflation moderating, some loosening in the labor market, which plays into exactly what the playbook was coming into this year. So I think they're right in the right place, and being data dependent and looking towards 2025 as an opportunity to continue the rate cut story starting in December of this year.
Jordan, you say in general that you're still pretty well disposed toward risk assets. I guess the question is how much the market's already sort of built in here. I've mentioned, you had the sell side strategists raising their price targets. One of the, I think, components of the bull case has been, hey, Wall Street's kind of fighting it. Nobody really thinks the market can do much. It seems like maybe expectations are in check. Is it starting to feel like it's running a little hot right now, or is the, I guess, negative sort of breath in the market, making that seem less the case?
Yeah, I think this suggests that we may be primed for a bit of pickup in volatility over the course of the summer. The reality is, look, we are expecting a broadening out in earnings growth from the rest of the market, not just technology really driving earnings in mega cap tech. That being said, mega cap tech is still expected to post double-digit earnings growth as well. And so I think, look, markets are becoming a little bit jittery, which I think rightfully so over the course of the summer, given where valuations are and given where interest rates are at. But I do think we're going to looking at it on the balance of the year, an equity market that's going to deliver 15 to 20% total returns. And I think we're going to rally pretty nicely in the fourth quarter, given you also have 2025 earnings growth expectations that are sitting in double digits as well. So I think there's a fundamental backdrop, a micro case to stay bullish. But also, again, the Fed is still very much biased, both implicitly and explicitly, to want to cut rates. This is not a Fed that's putting hikes back on the table. They're firmly biased to want to cut. It's just a matter of when. And I think both of those are bullish for the market.
Yeah. Now, Jason, where within the market looks like it hasn't yet quite been kind of fully reflective of the underlying earnings power? Because, everyone complains about, it's only a handful of stocks driving trillions of dollars of upside in market cap here. But that's also where the earnings momentum has largely been, is in those mega cap growth names. So do you find areas that are now primed to pick up as we wait for second quarter earnings? Estimates are up 9% year over year and are looking pretty solid at this point.
100%, Mike. I think obviously the story to our all points here is obviously, tech and the semi-hardware space has obviously done really well. The opportunities that I see more cyclically oriented is I look at the financials and I look at investment banking as an example. We've seen Goldman Sachs price action so far this year. It's up around 15%. It's pulled back in recent weeks, but I think there's opportunity there as we think about the capital markets and all the numbers that we've seen. I think IB has bottomed, absolutely, and I think we'll see a nice runway going into 2025. The other story that I look at is healthcare. Healthcare typically in election years doesn't really return very well, but I look at MedSurg as an opportunity. There's been a lot of discussion clearly on GLP-1s and what's going on with Eli Lilly and Novartis and some others. But I look at some of the device companies like Stryker, Intuitive Surgical. I think there's opportunities for these names to continue strength and see earnings power ahead. So those are a few of the opportunities that I see going forward.